Hey guys, welcome back to Duplicate Viewers. Have you ever heard about stock market? I think there will be no person in this generation who don't know about stock market. But most of the things that we have heard until now would turn out to be myths but not the truths. Some say stock market is illegal, some say it's gambling, it's risking our money and lot more. But what is the actual truth? You will get to know about it after watching this video completely. The video summarizes what is stock market, why should we invest in stock market, and how is stock market secure. So let's get started. Before going into the topic of stock market, there's a topic that needs to be understood and it is nothing but inflation. For example, 5 years back, 10,000 rupees per month is enough to maintain a normal small family. But at present in 2021, we are not able to make both ends meet with even 20,000 rupees per month. This is because in these 5 years, the cost of each and every item has almost doubled, and this is known as inflation. In 2015, if you put 10,000 rupees in your savings account, in these 5 years you may get an interest of 3,000 rupees. But now the amount needed has increased to 20,000 due to rising prices. In this case, you just lost the money by saving. In technical words, inflation is the rate at which the value of a currency is falling, and consequently, the general level of prices for goods and services is also rising. Unless we take that to grow our investments, inflation will make us much poorer in the long run. It eats away all your savings bit by bit. We all know this thing, but even then we fail to incorporate this knowledge into our savings and investment decisions. One of the best investment you can do is investing in stocks. But this requires some basic knowledge about stock markets. Stock market is a place where people buy or sell shares of publicly listed companies. It offers a platform to facilitate seamless exchange of shares. In simple terms, if A wants to sell shares of a X company, the stock market will help him to meet the buyer who is willing to buy the shares of that X company. However, it is important to note that a person can trade in the stock market only through a registered intermediary known as a stockbroker. The buying and selling of shares take place through electronic medium. There are two main stock exchanges in India where majority of the trades take place. That is Bombay Stock Exchange BSE and the National Stock Exchange NSE. But why don't we see every company in stock market? To know why, first you need to understand what is an IPO. IPO stands for Initial Public Offering, that refers to the process of offering shares of a private corporation to the public in a new stock issuance. But how it works? Let's know about it in detail. Prior to an IPO, a company is considered private. As a private company, the business has grown with a relatively small number of shareholders, with only early investors like the founders, family, and friends, along with professional investors such as venture capitalists or angel investors. When a company reaches a stage in its growth process where it believes it needs more funds or it is mature enough for the rigors of SEC regulations along with the benefits and responsibilities to public shareholders, it will begin to advertise its interest in going. The difference between an IPO and a stock is you purchase the IPO directly from the company and you buy a stock from a seller who is having stocks. But how to apply for this IPO and why to apply for IPO? We will talk about this in coming videos. Now coming into the part of security, if you are fearing to invest in stock market, you should know about regulatory of Indian stock market. That is SEBI, that stands for Securities Exchange Board of India. This is the regulatory body of the Indian stock markets. The main objective of SEBI is to safeguard the interest of retail investors and promote the development of stock exchanges and also regulate the activities of financial intermediaries and investors in the market. SEBI ensures the following. First one is the stock exchanges, BSE and NSE brokers and stockbrokers conduct their business fairly. Second is corporate houses should not use markets as a means to unfairly benefit themselves. Third one is small retail investors' interest is protected. Fourth one is large investors with huge cash should not manipulate markets. I hope you have got some knowledge on stock market, and I hope all your doubts about stock market got cleared. And if you still have any doubts that needs to be cleared, the comment box is open for you and you can ask your doubts there. Here is a bonus tip for you. Remember the technique which I am going to say now. In age between 20 to 30, invest 80% of your income. And at age 30 to 40, invest 60%. And at 40 to 50, 40%. And finally 50 to 60, invest 20%. This is it guys, thanks for watching till the end. Do like this video and share it with your friends if you find it valuable. And subscribe our channel for more such valuable content. See you in the next video. Bye.